Depending on where you go into this journey from, that will determine where what to emphasize with these 5 steps. But number one, what is stock trading? What is the stock market? And as I just mentioned, it's a way of owning and buying a publicly traded company, investing in it, and making money off of it, or potentially losing money off of it. Now, for me, I understood that part. So my next question, which will be number 2, how do I invest? Like, where do I go to do this? They have multiple trading companies. E-Trade was one of them, and that's what I actually started off with. I went with them because they had the lower commission fee, I believe. I think it was $9.95 when I first started, but later on, towards the end of when I had traded with E-Trade, it dropped down to $4.95, and that's what I used to trade my stocks. And you need one of these type of companies to do that, and there's multiple out there. Nowadays, I trade with Robinhood, and that is what I will recommend because Robinhood, I'm a millennial, and Robinhood is very geared towards that millennial crowd. It's an app software, and the way the interface is and everything is just very modern and contemporary, that it fits with me, and I'm pretty sure it will resonate with the audience that I usually speak with, which would be the younger adults. So I use Robinhood now, and that's what I would recommend. Robinhood has no commissions, which is what really made me make that switch. So no commissions with your trades, and you can do. I haven't hit the limit, but there is a limit. But you can do multiple trades within a day. You can also do there's other advanced options for trading stocks that you will have to look up, but I wouldn't get into because it can get complicated. But for the basics of what we're talking about, just buying and selling a stock, Robinhood does it perfectly. With Robinhood, there are some limitations with Robinhood compared to other programs such as E-Trade. Those programs are a lot more robust and cater to a different audience. Now, for this audience, you're just trading some stocks here and there, save up some money, maybe get some returns on your investment. Cool. Use Robinhood. Perfect. And the question is, how much do you put into your investment and where do you put it into? You've heard people talk about diversification, diversifying your portfolio, and having multiple things and all these complications. Really, it boils down to what company do you believe in the most. For me, I believed in Intel. There was no way Intel was going to fail me. Even if the gains were not high, it was still going to be a good amount of gain. So I saw that, and for me, I was confident in that. So I put my money in there. I recommend starting off with just one company, which is what I did. And how much do you put in? Put in as much as you need to. With Intel, I think it was trading around 20s when I first bought it. If it's a company like Amazon where it costs $1,000, what are they trading at right now? $1,400. Well, if you don't have $1,400, well, you're screwed. You can't invest in that company at all. Even if you wanted to, you just don't have. There's an entry price, and you just don't have that. With a company that you trust and also the entry point, you can afford it, go for that. That's the company that you invest in. Invest however much money you can comfortably put in there and that you're comfortable losing. This is the key part. You're comfortable losing. The amount I put into Intel initially was money that I was like, okay, if I lose this, great. But if I gain something from it, it's like an extra X amount of dollars that's going to be nice to have. But I'm not struggling if I do lose that. So that is how I made that decision. Number 4, how do you put money in and take money out? Good question. You need to have a bank account. Make sure you have a bank account that you can transfer from this, because that's usually how, well, at least that's how I was transferring my money. Now with the bank account, you can easily link it. With Robinhood, I'll go with again, since that's what I use. You can link your bank account and simply just transfer money, X amount of dollars. And with Robinhood, you get, oh man, I want to say around 500, or is it a percentage? You get some amount that you can invest in immediately, and while the rest completely transfers. So let's say like when I first got Robinhood, I was rushing to get it because I had to get a stock before, because I was expecting an increase in that stock. So I wanted to buy it before it had that increase. So that was one thing that was nice about that, because I could, right immediately once I transferred the money, I could invest right away. So that's how you put that. And then once you're done, you just sell. If you don't have to be in, have a holding in a company or own a stock with to have the account. You can have the account, have your money there, and you can sell all your stocks and just have your money sitting there. And whenever you need to purchase one, you just make the purchase through the app. But if you're done with the app and you need that money, you can easily just take it out. For E-Trade, I believe it took maybe a couple of days before I was able to get all of my money. So there's a little bit of a delay. I haven't taken my money out of Robinhood, so I don't know. But if you need it right away, I would recommend taking a little bit extra time beforehand to do that. Number 5, before you get all excited and carried away, do understand this is profit. This is income that you're making if you do gain from this. So it is taxable. Uncle Sam's gonna come for you, so do be prepared for that. Don't think the amount that you're making is just free money. It will be taxed, and how much is taxed depends. Depends on multiple things. The tax bracket you are, so how much you're making a year determines your tax bracket, and also how long you held onto that company for. Now, if you hold it for more than a year, that's considered a long-term holding, versus if it's less than a year, that's a short-term holding. Now, if you hold it for a short term, you will be taxed based on your income level, and if you're an X amount of percentage on the tax bracket, that's a percentage that you will be taxed. Now, if you hold it for a long time, for a long term, you get taxed differently, and this is called a capital gains tax. And with a capital gains tax, it's dependent on, it's usually around 15%, but once again, depends on your tax bracket. If you're in the lower level, you could be taxed as low as 0%, I read, or if you're in the higher level, you can be taxed as high as 35% on the profit that you made. All right, we're back. It's all sounding good, right? Oh yeah, I make some money, I get a little bit of taxed on it. Yeah, life's good. But that's not the reality of trading stocks. You will lose money. Hence why I said invest in the amount that you're okay with losing. What happens when you lose money? How do you get taxed on that? Well, that becomes a deduction. What a deduction is, it's money that can be reduced from your total income for the year. Let's say you make $10,000 in the year and you lose $2,000 playing around in the stock market. Now your taxable income is $8,000. There's a limit to the amount of deductions you can have, and that'll be determined when you're filing your taxes. Go with a tax service provider to be able to determine exactly what that would be. But that money can be deducted from your income. A long video for freak me. The Undertaker's coming, man. That was a long talk about taxes. I don't even remember what we're talking about. That's how long I've been talking. That was a long talk about stocks and what they are. And, those are your 5 basics to getting started with trading stocks. Remember, understanding what stocks are, what you're doing exactly. You're just trading these companies, essentially gambling, betting on them. And you can lose and you can gain money. So you have to be okay with both of those. Then understanding where to go to trade stocks. Robinhood has a recommended. How much? Well, amount that you're okay with losing. Where? What company do you invest in? And how much? Well, it's the company that you believe in. It doesn't really matter. As long as you believe in that company, you're going to be comfortable with them. And remember, it's just a percentage. Whatever percentage you make in the stock market is how much that you're going to get. And also keeping in mind that you will be taxed on this amount of profit that you make. So budget wisely and don't think X amount of dollars you made in profit is what you now have to spend, but taking into consideration that tax will eat some of that. Go ahead if you have questions. I'd like to know. Other than that, good luck. This is personal advice from just what I've done. Do whatever you like to do. Up to you. But if it helps you out, that's cool. All right.